The markets have had sort of a rocky road, can we say, so far this year. As you look forward, is there any real prospect they can recoup in the second half of the year?
Probably not totally. Let's start off, the market has recalibrated itself. We witnessed now a change in policy in the Federal Reserve. We raised short rates. So we saw a recalibration of growth stocks. That's principally the majority of the downfall. And yet the index are masking some of the problems because part of the index are energy companies, commodity companies that are up quite a bit. So if you look at the volatility in the market and the spread between winners and losers, it's pretty broad this year. And so we've taken out a lot of those gains that we saw during the COVID years and during the 2 years where we were, changing our lives and we were emphasizing different companies, and now we're seeing the reverse impact of that. So that was one of the foundations of it. But now there's greater recognition that inflation is not transitory. It is probably with us for a number of years. And it's the type of inflation that I don't believe the Federal Reserve has the policy or the tools to do much with it right now. And I'm personally not blaming the Federal Reserve for where we are right now. But I believe most of the problems we're living with today are more policy generated and supply generated. Demand right now in our economy is equivalent to the demand that we saw pre-COVID. And so we're witnessing all these supply shocks, and that's creating these attended price increases. And so it's more supply driven. It's been aggravated now, obviously, by COVID and lockdowns in different parts of the world where we are manufacturing goods. It has been further aggravated by the Ukraine Russian war and where we have supply shocks. But I have this fundamental view that much of the inflation has been generated by some very large policy shifts in the United States.